Real estate market's going to crash, and I'm not going to invest until it crashes. Can you kind of break down the challenge behind that thinking of trying to time the market?
Yeah, we hear that statement in a lot of different varieties. My own son the other day was telling me that he wants to start investing because he's finally got his first job, and so he's saving some money, and he wants to start investing, but he wants to wait for the market to get a little bit calmed down and become stable before he does. And I asked him the question, when exactly is that? Tell you what, go back and do a little bit of homework, look at the history of the market, and tell me, when has that ever happened in history? It hasn't. The markets are inherently unstable. If you're looking at daily prices, they never stabilize and stay flat or just become linear. The structure of the market is stable, but in that structure, prices are going to be volatile. And trying to predict what is going to happen tomorrow, when we look out over very long time periods, you kind of have this, we think of it like a regression to the mean. You've got some sort of a base level of value, or what we would refer to as an intrinsic value of a thing. And on any given day, the market is it's a big auction. Okay, people are coming to the market and looking to buy, and a transaction happens to the highest bidder. Well, on any given day, someone might be willing to way overpay for a thing. And on some days, people are relatively pessimistic, and maybe things are selling for significantly less than they're worth. But over time, those prices kind of go up and down, but revolve around sort of that intrinsic value. So we can look at that intrinsic value and say, okay, 10 years out, what's this thing really worth? And what do we think we're going to make overall? But trying to pick what those points are going to look like, or identify where exactly are we, are things going to go down next or up next? I don't know anybody who can do that.